Welcome to Investors Insights. Our topic today is timber up, dollar down. Now, on that note, this morning we're having our own morning cup of coffee. And Ashley, you threw out some information that we all turned our heads. Talk about timber.
Lumber prices are through the roof.
Okay.
And if they keep going, it's really going to slow the housing market down, a major component of our growth. What's happening there is it's based in Canada. You have a lot of wildfires in the country this year that is really just wiping supply out. And in addition to that, the U.S. was already in a little bit of a trade war with the Canadians over lumber anyway.
Okay.
So you put those two together, prices skyrocket, and if it keeps going, it's going to have a housing effect, no doubt.
Okay, so housing prices could go up.
Absolutely.
And we'll talk about the consumer here in a few minutes.
Yes.
And how that can impact economy and portfolio. Right. On that note, then you came back and I'm like, what did I do to deserve this? You came back and said dollar down.
Yeah, so the dollar hit a 24-month low against the European Union euro currency. And that sounds bad, dollars down, but that actually could be very good for U.S. companies.
Okay, talk about that.
Yeah, over 40% of U.S. companies' earnings come from overseas. And so when you have a weaker dollar, that allows those overseas sales to translate into higher earnings domestically. So we could see already a strong earnings season, get a little boost, maybe not something permanent, but a temporary boost. Now where this usually is bad is in commodities like timber or oil, where we saw dollar weakness. You usually see prices of oil shoot up because it takes more dollars to buy the same barrel of oil. But because of the innovation in the U.S. oil industry, oil prices have not just not risen, they've continued to fall in this dollar weakness. So you see corporate earnings get improved, and you don't get the downside of higher oil prices at the pump. And so it's kind of, we're in this kind of Goldilocks part right now where it's not too hot, not too cold. Where we could see a really good benefit from that for the consumer and for companies.
Yeah, consumer keeps more money in their pocket.
That's right.
Or they can spend it somewhere else.
Spend it somewhere else, and companies make more money. That helps the market continue its rise.
Sure, which could impact portfolios in a very positive way, correct?
Yep, completely.
So it's a constant balance as to, where are prices going up, where are we seeing cost and prices going down. And then, Bobby, you came in with a great discussion kind of bringing this together about all the data we've got coming out this week, which ties into that. Talk about that.
We have a very important GDP number or GDP report on Friday, and that's important because this morning the International Monetary Fund actually downgraded the U.S. growth forecast for this year and next. And so we really need that GDP number to come in strong. Expectations are around 3%. Now, the first quarter GDP was 1.4%. That is slow growth. And so you want, in a healthy, growing economy, you need that 3 to 3.5% GDP.
Right.
And so looking at some numbers recently for the quarter, housing is continuing to look great. I know you mentioned timber. Yeah. Hopefully that won't have a negative effect, but housing's strong. We have manufacturing numbers looking good. But the consumer has slowed up a little bit. The consumer spending is down 2 months in a row. Consumer 70% of that GDP number. So we really need that GDP number to be better than it was or has been because we do have some timber prices. We got oil down. And so there's a lot to look at. But that number is very important on Friday.
Well, and that brings up the discussion of looking at the moment and at the same time looking down the road. Absolutely. What to anticipate and how it can impact our clients' portfolios and the overall market and economy. So on that note, we're looking down the road. We want to keep you up to date today, tomorrow, and going forward. Make sure you continue to follow us on LinkedIn, Twitter, Facebook. We continue to put articles and other information and dialogue vlogs out there. We also appreciate you forwarding it to your colleagues and friends and family. That's meant a lot to us. And if you have any questions or ideas you'd like to share with us, don't hesitate to contact us. This is all about communication in multiple ways, whether one-on-one, by phone and in person, but also using technology, high-tech, high-touch. So have a great week. We'll keep you updated, and we'll continue to look down the road.